All right, so welcome to the deep dive. Today we're going to be looking at the UK tax landscape in 2025, but more importantly, what it means for you. You know, your personal finances, the stuff that matters. So we have a really interesting blog post from MNCO Accountants. They break down the top 5 areas that HMRC, you know, the HM Revenue and Customs is really focusing on. And whether you're a business owner, a landlord, a contractor, or just someone who likes to, you know, be in the know, this deep dive is definitely for you. So we're going to be unpacking exactly where HMRC is aiming their sites, and even more importantly, what you can do to stay ahead of the curve.
Yeah, preparation is key, right? I think what's interesting is that HMRC's approach, it's not just about, catching people out. It's also about encouraging a shift towards more transparent and efficient tax practices, which is good for everyone in the long run.
Okay, so let's dive right into these 5 key areas. First up on HMRC's radar is making tax digital, or MTD for short. It's already in place for some, but it's expanding this year. What's the thinking behind this expansion, and are there any potential pitfalls people should be aware of?
Well, MTD is being rolled out to self-employed individuals and landlords this year in 2025. And the idea is to kind of bring everyone on board with digital record keeping and reporting. So while this might seem like a big change for some, the blog post highlights some real benefits. For example, one small business managed to save a whopping 20 hours per quarter just by switching to digital bookkeeping. Plus, they saw a significant reduction in errors on their tax filings. So, while there's an initial learning curve, it seems like the long-term benefits could definitely outweigh the initial challenges.
Right, right. Sometimes change can be good, even if it feels a bit daunting at first. But what about those who aren't quite ready to embrace the digital world?
Well, HMRC is making it clear that there will be penalties for noncompliance ranging from 500 to 3,000 pounds. Ouch. But beyond the stick, there's also a carrot. This shift to digital record keeping, it's not just about compliance. It's about giving individuals and businesses access to powerful data analytics tools. So by embracing MTD, you can gain a deeper understanding of your financial performance and potentially even identify areas for improvement.
So it's not just about avoiding penalties. It's about harnessing the power of data to make smarter financial decisions. Yeah. Okay, now let's move on to the second area HMRC is focusing on, VDA compliance and fraud prevention. This one seems particularly relevant for online sellers.
Yeah, you're right. HMRC is definitely stepping up their efforts to tackle VAT fraud, particularly in e-commerce and cross-border transactions. They're even working directly with platforms like Amazon and eBay to monitor overseas sellers. The blog post actually includes a calculation for a hypothetical e-commerce business with 50,000 pounds in UK sales. Turns out their VAT liability would be 10,000 pounds. So if they get the reporting wrong, they could face a hefty penalty of up to 2,500 pounds on top of the VAT they already owe.
Wow, that's a significant sum. So accurate VAT reporting is crucial no matter where you're selling from. Can you shed some light on the types of fraud HMRC is targeting and how their collaboration with these online platforms actually works?
Sure. So they're particularly concerned with instances where businesses are either not charging VAT when they should be, or where they're claiming VAT refunds that they're not actually entitled to. So by collaborating with online marketplaces, HMRC can actually track sales data and identify inconsistencies, the ones that might point to fraudulent activity. And this allows them to really focus their resources on investigating those who are, deliberately trying to cheat the system.
It sounds like they're taking a more targeted approach to enforcement.
Okay.
Let's shift our focus now to the third area on HMRC's list, IR35 legislation. This one's been causing quite a stir among contractors and freelancers. Can you break down why it's such a focus for HMRC and what it means for those who fall under these rules?
So IR35 is designed to ensure that workers are correctly classified for tax purposes, preventing individuals from falsely claiming self-employed status to, avoid paying their fair share. It's about, making sure everyone contributes appropriately to the tax system. The blog post uses a hypothetical scenario to illustrate the potential consequences of misclassification. So if a contractor earning 75,000 pounds per year is incorrectly classified as self-employed, they could face a backdated tax bill of £15,000 in pay taxes, plus an additional £10,000 in employer national insurance contributions, NICs. And that's not all. They could also be hit with a penalty of up to
Ooh,
£5,000.
that's a hefty financial burden to carry. It seems like a clear understanding of IR35 is absolutely crucial, both for contractors and the businesses that engage them. What steps can both parties take to ensure they're on the right side of the rules?
Well, the key is clear communication and accurate assessment of the working relationship, right? So if a contractor is effectively operating as an employee, then then they should be taxed as such. HMRC provides a helpful online tool called CEST, that stands for Check Employment Status for Tax, to help determine the correct classification. But if there's any doubt, it's always best to seek professional advice from a qualified tax advisor.
Good advice. Yeah. It's always better to err on the side of caution when it comes to tax matters. All right, now let's move on to target number 4, property income. It seems HMRC is shining a spotlight on landlords and property developers in 2025.
Yeah, definitely. HMRC is particularly concerned with those who might be underreporting rental income or capital gains from property sales. They've been stepping up their investigations in this area and have recovered significant sums from undeclared property income in recent years. The blog post highlights just how costly noncompliance can be, even for seemingly small amounts of undeclared income.
Can you give us an example?
Sure. Let's say a landlord is making £20,000 annually from rental properties, and has allowable expenses of £5,000. This means they have a net income of £15,000 to report, and their income tax bill on that would be around £3,000. But if they fail to report this income, they could be hit with fines of up to 100% of the unpaid tax, essentially doubling their liability.
Yikes. That's a stark reminder that accurate record keeping and transparent reporting are essential for anyone with rental income. Now on to HMRC's final target, offshore tax evasion. It seems those days of hiding assets in secret overseas accounts are becoming a thing of the past.
Oh yeah, absolutely. Thanks to international information sharing agreements, HMRC now has access to a wealth of data on overseas accounts and assets. They're actively using this information to track down those who are trying to avoid paying their fair share.
So what's the message HMRC is sending to those who might be considering hiding assets offshore?
The message is loud and clear. It's not worth the risk. HMRC is becoming increasingly effective at detecting and pursuing offshore tax evasion. And the consequences of being caught are severe. You're not just talking about paying back taxes and penalties. In some cases, it could even lead to criminal prosecution.
So transparency is paramount. It's not just about staying on the right side of the law. It's about maintaining a good reputation and avoiding potentially devastating financial and legal consequences.
Exactly. In today's interconnected world, it's becoming increasingly difficult to hide from the taxman. HMRC has more tools at their disposal than ever before, and they're not afraid to use them.
We've covered a lot of ground in this first part of our deep dive. HMRC's 5 key focus areas paint a clear picture. They're moving towards a more digital and transparent tax system, and they're serious about enforcing compliance. Now, I'm curious to hear your thoughts on what this means for the average taxpayer. What are the biggest takeaways from all of this?
Well, I'd say the most important takeaway is that staying informed and proactive is key. HMRC is providing more resources and guidance than ever before, and it's in everyone's best interest to understand the rules and their obligations. But don't worry, we'll dive deeper into specific strategies and resources that you can utilize to stay ahead of the game in the next part of our deep dive.
That's right. We'll be back after a short break to delve into practical steps you can take to navigate these changes and ensure you're well prepared for whatever HMRC throws your way. Welcome back to the Deep Dive. Before the break, we outlined HMRC's top 5 focus areas for 2025. Now let's get practical and explore how you can navigate these changes. We talked about HMRC's push towards digitalization, especially with making tax digital. It's one thing to say go digital, but what does that actually look like for the average person? Are there any tools or software you'd recommend?
Well, you're right. It can be overwhelming to know where to start. The good news is that there are, many options available, but the key is finding software that meets HMRC's making tax digital requirements. That's the baseline.
So MTD compliance is the first box to tick. What else should people consider when when choosing digital bookkeeping tools?
Ease of use is crucial. Some software can be quite complex, especially if you're, not particularly tech savvy. Look for something intuitive and user friendly, so you're not, spending hours wrestling with the software. After all, if it's too complicated, you might be tempted to revert back to old habits, even if it means, risking those HMRC penalties.
Right. It's about finding a solution that works for you and your level of comfort with technology. What about support? Is that something to factor in when making a decision?
Absolutely. Look for software providers with excellent customer service, training, and tutorials. It's like having a safety net,
Hmm.
knowing that help is available if you encounter any roadblocks. You want to feel confident that you can get assistance when needed, especially if you're, new to digital bookkeeping.
That makes sense. It's like having a partner in this transition rather than feeling like you're going alone.
Yeah.
Now, are there any specific features you find particularly useful in digital bookkeeping software?
One feature I find incredibly helpful is automatic transaction categorization. This saves a huge amount of time and reduces the risk of errors, especially if you deal with many transactions. The software, takes the heavy lifting out of manually sorting through receipts and trying to remember what each purchase was for.
So no more shoeboxes overflowing with receipts. That sounds like a dream come true for many people. Are there any other standout features?
Another valuable feature is the ability to generate reports. This provides a clear overview of your finances, allowing you to track income and expenses, and identify potential red flags. This can be particularly useful for VAT returns. Having the ability to generate accurate reports quickly and easily can save a lot of headaches.
Speaking of V8 returns, are there specific tools that cater to the complexities of V8, especially for businesses engaged in e-commerce or cross-border transactions?
Certainly, some software programs offer advanced features like V8 calculators and reporting tools,
Yes.
specifically designed to handle the nuances of international V8. If your business involves, complex V8 transactions, investing in software with these advanced features is definitely worth considering.
It sounds like digital tools are becoming increasingly sophisticated in their ability to handle complex tax scenarios. But even with all these advancements, it's important to remember that technology is just one part of the equation, right?
Precisely. While these digital tools can, streamline the process and enhance efficiency, they are they are not a substitute for understanding the tax rules and regulations that apply to your situation.
So it's not about blindly trusting the software to do everything for you. You still need to have a good grasp of the underlying principles.
Exactly. The software can only work with the information you provide, right? So if you input incorrect data or misunderstand the rules, the software won't be able to prevent costly mistakes. That's why seeking professional advice from a qualified accountant remains crucial. They can help you navigate the complexities of the tax system and ensure you're claiming the correct deductions and allowances.
Sound advice. Sometimes having that human expertise can make all the difference. Now, we've talked a lot about the benefits of digitalization for taxpayers, but what about the implications for HMRC? Does this shift towards digital tax reporting give them more power?
It's a valid question. On the one hand, digitalization does provide HMRC with greater access to data, potentially making it easier for them to detect non-compliance. You could
Oh.
say it's like giving them a bigger magnifying glass.
So there's the potential for increased scrutiny, but is that necessarily a bad thing?
Not necessarily. Increased transparency can also lead to greater fairness in the tax system.
Hmm.
If everyone is playing by the same rules and reporting their income accurately, it levels the playing field. It's about ensuring everyone contributes fairly, not just those who might struggle with technology or the intricacies of tax regulations.
That's an important point. It's not about targeting individuals or businesses, but about ensuring a fair and equitable system for everyone.
Yeah.
But I do wonder if this increased power for HMRC comes with additional responsibilities.
Hmm.
How can we ensure they use this data responsibly and ethically?
You're right. That's a critical consideration. We need to ensure HMRC utilizes these powerful tools transparently and accountably. Data security is paramount, and safeguarding taxpayer privacy must be a top priority.
It sounds like a delicate balance needs to be struck between leveraging data for good and protecting individual rights.
Exactly. The focus shouldn't be solely on the technology itself, but on how it's used, and the safeguards in place to ensure it benefits everyone.
That brings us back to the importance of staying informed and engaged. We can't simply assume technology will solve everything. We need to understand its workings, its limitations,
Right.
and how we can contribute to its ethical and responsible use.
I couldn't agree more. Open dialogues and critical thinking about how technology is shaping our world, especially the world of taxes, are crucial.
It's a conversation that needs to continue as technology evolves.
Well, we've explored the practicalities of going digital, but let's not forget the human element. We mentioned earlier that seeking professional advice is important. Now, let's talk about the specific resources available to help taxpayers navigate these changing landscapes. So we've talked about the importance of professional guidance, but what about HMRC themselves? Do they offer any resources to help taxpayers, understand their obligations?
Yeah, for sure. HMRC isn't trying to make things difficult. They want people to understand the rules. Makes it easier for everyone to comply.
So no more, deciphering ancient tax manuals then.
No, definitely not. Their website's a great starting point. You'll find loads of information on everything from, making tax digital to specific tax reliefs and allowances. It's all written plain English and it's regularly updated. That sounds much more accessible than wading through pages of jargon. What about direct support? Can you actually speak to someone at HMRC if you have questions?
Oh, absolutely. They have a really helpful web chat service where you can connect directly with an HMRC advisor. And in my experience, it's the quickest and most efficient way to get answers.
So instant access to expert help. That's fantastic. Are there phone lines available as well?
Yeah, they have dedicated helplines for different types of taxes and inquiries. However, I have found that the web chat is generally faster and more convenient.
It's great to know that HMRC is making themselves more accessible and providing multiple avenues for support.
Yeah.
Now, beyond HMRC's own resources, are there other organizations that offer guidance on tax matters?
Yes, definitely. Citizens Advice is an excellent resource. They have a ton of information on their website, and they offer, face-to-face advice at their local offices. They're a fantastic organization, do incredible work helping people navigate complex issues, not just taxes.
Yeah, Citizens Advice is a real lifeline for many people. Are there resources specifically for businesses?
Yeah.
And self-employed individuals?
Absolutely. The Federation of Small Businesses, or FSB, is a fantastic resource for small business owners. They offer a range of services, including tax advice, legal support, and business mentoring.
The FSB is known for its strong advocacy for small businesses.
Yeah.
What about support networks for those who are self-employed?
Online forums and communities can be incredibly valuable, especially for those who are new to self-employment or facing specific tax challenges. These platforms provide a space to connect with others in similar situations, share advice, and learn from each other's experiences.
It sounds like there's a wealth of support available, both from official sources and within the wider community. But at the end of the day, sometimes you just need the expertise of a qualified professional.
You're absolutely right. While there are many resources available for those who want to handle their taxes themselves, sometimes it's simply easier and less stressful to have a qualified accountant take care of everything.
Especially when dealing with complex tax issues, or if you simply don't have the time or the inclination to do it yourself. A good accountant can save you time, money, and a lot of potential headaches.
Yeah, they can also help you identify potential tax savings and ensure you're taking advantage of all the reliefs and allowances that you're entitled to. It's an investment that can really pay off in the long run.
We've covered a lot of ground today, haven't we? We've explored HMRC's top targets for 2025, the shift towards a more digital and transparent tax system, and the abundance of resources available to help taxpayers navigate these changes.
We have. And if there's one key message to take away from this deep dive, it's that knowledge is power when it comes to taxes. The more you understand about the rules and your obligations, the better equipped you'll be to navigate the system confidently.
And remember, it's not about trying to outsmart HMRC or find loopholes. It's about being honest transparent and proactive in managing your tax affairs.
Absolutely. And if you're ever unsure about anything, don't hesitate to seek professional advice. It's always better to be safe than sorry.
Wise words. Well, that concludes our deep dive into the world of UK taxes. A huge thank you to you for joining us today and sharing your expertise. It's always a pleasure to learn from you.
The pleasure was all mine. It's been a great discussion, and I hope our listeners feel empowered to take control of their tax situation.
And to all our listeners, thank you for tuning in to Deep Dive. We hope you found this deep dive informative and insightful. Remember, staying informed is the best way to stay in control of your finances and avoid any unwanted surprises. Until next time, happy tax filing.